5 seconds to the open.
Ready?
Who wants to get this thing started right about now?
Welcome to Follow the Money Weekly with your host, Jerry Robinson.
Welcome.
Not just some guru.
Oh, really?
Your host is an economist and a best-selling author.
What an interesting news item. I'd better write that down.
And just someone who likes to make money and help you to make money. Welcome to Follow the Money Weekly. And here he is, Jerry Robinson.
Friends, welcome to you all around the world. Welcome to Follow the Money Radio. So grateful to have you here along for the ride. You can find us online anytime, 24/7, followthemoney.com. There you will find a plethora of articles, videos, podcasts, PDF reports, all kinds of education for those seeking to improve their financial lives, those seeking financial liberty, those who are seeking to break free financially in some way, shape, or form. That's what we're here for. We've been here since 2010, talking about many things. In fact, even before that, we were talking about the economy, but our website was launched in 2010, and so you'll find all kinds of resources right there. Well, today's podcast is pretty exciting because we're going to be talking about something that many people, I'm not really sure how many people are familiar with the topic of trend trading. Of course, people are familiar with the topic of trading, stock trading. You buy a stock and then you sell it for a profit. Hopefully you buy low and sell high, as the old adage says. But what is trend trading? Well, today I'm going to provide you a beginner's guide to trend trading, what it is, and how you can use it to actually earn money in the stock market or in the commodities market or in the bond market. Really doesn't really matter what market you choose. You can really trade or trend trade any market that's out there. But today we're going to be talking about trend trading. What is it? And what's it all about? So let's begin. What is trend trading? Well, trend trading is a momentum-based trading strategy that seeks to buy stocks or other investment vehicles. We could buy futures, commodities, ETFs that are rising in price, and then to sell them or even short them, or maybe even avoid them altogether when they are falling in price, right? So the general assumption here underneath trend trading is that a stock will continue moving in its current direction. Pretty simple. That is, trend traders assume that a stock that is in an existing uptrend will remain in that uptrend until the trend shows signs of reversing, as evidenced by a failure to form a new high. Now, unlike some types of traders, trend traders do not attempt to predict or forecast price levels. They know that no one can predict the future, right? No one has a crystal ball. Instead, they simply identify and exploit new trends as they develop and exit them when they reverse or end. So to identify a new buy signal, the trend trader does not rely upon the news. He does not consult the opinions or predictions of a market guru. In fact, trend traders don't even rely upon their own feelings or their own emotions. Instead, they choose to rely upon a rules-based system and signals that are generated by the price and volume data available on a stock chart. Now, trend traders do not try to time the market by buying at the bottom and selling at the absolute top. Instead, they wait for a confirmed uptrend or downtrend to develop before they take action. Now, most trend traders use something known as stop loss orders, which automatically execute a sell order when a price reaches a level that would signal an end to the current trend. In so doing, trend traders seek to maximize their gains and limit their losses by adhering to the old market adage to cut your losses short and let your winners run. So having said all that, basically trend trading is just literally trading with the trend. If you're a surfer, for example, you like to surf on the ocean, or if you've ever met a surfer, he likes to catch a good wave. He likes to ride the waves, and he looks for the beach with the biggest waves. Well, it's the same way with a trader. A trader without a trend is like a surfer without a wave. You need a wave, or a trend, if you will, so that you can profit from the markets. So now that we've talked about what trend trading is, let's move into a little bit of a history about trend trading. I'm kind of a history geek. I like to get into where things come from, their origins. Well, let's talk about the origins of trend trading. So the idea of momentum-based trading and trading with the trend goes back many centuries. In fact, that old market adage that I just quoted about cutting losers early and letting winners run was first attributed to the 18th century economist David Ricardo. So too, many of the greatest traders throughout the 20th century, men like Jesse Livermore, Bernard Baruch, and Nicholas Darvas, all understood the power of trading with, not against, the prevailing market trend. However, the modern concept of trend trading, or trend following as it is also known, as we understand it today, really goes back to the commodity trading pits in Chicago. Professional commodity traders have long understood the importance of trading with the trend. In fact, back in the 1980s, kind of the early 1980s, there were two famous commodity traders, Richard Dennis and Bill Eckhart, and they were engaged in a debate over whether trading was a skill that could be learned by the average person. Now, while Eckhart believed that successful trading was an innate skill only enjoyed by those genetically predisposed, Dennis disagreed and believed that trading was a skill that could be learned just like any other skill. In 1983, the two traders decided to conduct an experiment to determine who was right. They took out advertisements in major business newspapers like the Wall Street Journal and Barron's, seeking apprentices for their study. After being overwhelmed by more than 1,000 applicants, they settled on just a handful of students, whom they called the Turtles. Each of the students, who reportedly had little to no trading experience, were invited to Chicago for an immersive 2-week training on the basics of trading and were given a small amount of money for trading purposes. Within 4 years, this small group of traders had amassed more than 80% in compounded gains. And the rest was history, as they say. The experiment had proven Dennis right. Anyone who learned and applied the proper methods could succeed as a trader. Now today, trend trading has been recognized as a valid method for profiting from the financial markets, and trend trading is clearly a concept that is here to stay. So let's go deeper as we talk about what trend trading is, and let's move into the topic of a trend. Now that we know what trend trading is, and now that we have a little bit of a history about it, what is a trend? Well, a trend is defined as the general direction of a market. While trends can be identified in any data set, we are specifically focusing on trends within the stock market. So stock prices can move in only one of 3 directions: up, down, or sideways. So how does trend trading work? Well, when a stock price is rising, as evidenced through higher highs and higher lows in price, the stock is said to be in an uptrend. When a stock is falling, as evidenced through lower highs and lower lows, the stock is said to be in a downtrend. And when a stock is moving sideways, gyrating between similar highs and similar lows, the stock is said to be in a period of consolidation or in a trading range. In essence, it's moving sideways. Now, as a trend in the stock price develops, a trend line can be imposed onto the price highs and lows to reveal the direction, as well as the upper and lower bounds of the trend. So trend traders seek to enter into a long position when a stock is in an uptrend, and then they often either exit the stock or short the stock when the stock is in a downtrend. Trend trading is a strategy that can be used by all types of traders, including short-term and longer-term traders. We'll talk a little bit more about that in a few minutes, but first let's turn to strategy. You know, there really is no one-size-fits-all approach to trend trading. That's what I've learned over the last 20 years. In fact, there are several different strategies that are employed by trend traders seeking to identify entry points. These include, number 1, moving average strategies. So this strategy involves entering a stock when a short-term moving average crosses above a longer-term moving average. And then you exit when the short-term moving average crosses back below the longer moving average. Others might enter a stock when the stock's price rises above a particular moving average, especially on stronger than normal volume. Most trend traders use a combination of moving average strategies and often require a stock's price to be trading above or below a certain moving average prior to their entry. Now, moving averages are also commonly used as key areas of support and resistance. In addition to moving average strategies, there's also technical indicators. So in addition to the price and volume that you can see on a stock chart, many trend traders use some combination of technical indicators such as stochastics, MACD, RSI, Bollinger Bands, whatever the case might be. And they use these to time their entries and their exits. Technical indicators come in many different forms and are ultimately used by trend traders to simplify the price and volume data. Some track a stock's momentum, while others help the trend trader identify when a stock may be oversold or overbought, which could provide us a buy signal or a sell signal. In addition to technical indicators, you can also use chart patterns as a trend trader. It's a very powerful method for identifying new buy and sell opportunities. And the way you recognize these is through patterns that develop on a stock's price chart. Now, while there are literally hundreds of different price patterns and chart patterns that a trader can use, most of them over the years have proven to be unreliable. In fact, only a few chart patterns actually have a high accuracy rate, which tend to be the ones most trend traders come to rely on. And then finally, there is a fourth strategy, which is simply trend line analysis. Trend line analysis, one of the most common strategies used by trend traders, is simply to use support and resistance lines that can be visualized or drawn onto a stock chart. Bullish traders use areas of support as potential entry points or for placing a stop loss. Meanwhile, bearish traders use areas of resistance as potential entry points and areas of support for stop losses. So as you can see, there's many different types of strategies that you can really use as a trend trader. The best trend traders use a combination of some or all of these strategies to increase their probability of making money in the financial markets. Now, trend traders use a form of technical analysis known as trend analysis. Trend traders use past price and volume data to determine where the stock price might be heading in the future. Of course, without forecasting, they're simply looking at the price and volume and using that as their metrics. Because trends tend to continue until they are disrupted, trend traders attempt to trade with the trend and not against it. I often find that new trading students are surprised at the simplicity of trend trading, as it advocates buying stocks that are going up and selling stocks that are falling in price. So when conducting trend analysis, most trend traders recognize three different types of trends based upon different time frames. Now, these include short-term, intermediate, and long-term trends. And because each of these trends play an important role in trend analysis by different types of traders, let's just briefly explain each one of them. First, you have the short-term trend. And as you could probably guess by now, the short-term trend is used by short-term traders, like swing traders, who seek to hold their positions anywhere from a few days, maybe up to a couple of weeks, maybe 2 or 3 weeks. These trends are best identified on a chart set to a daily time frame. Now, while short-term traders can benefit from conducting trend analysis on longer-term time frames, they usually seek to identify their entry and exit points on a daily or even an intraday chart. In addition to short-term trends, you also have intermediate-term trends. Now, intermediate trends are the go-to trends for position traders. These are traders who seek to hold their trades for a period of weeks or even up to months. These longer-term trends are more powerful than short-term trends and are best identified on a chart set to a weekly time frame. While position traders can benefit from conducting trend analysis on longer-term time frames, they usually seek to identify their entry and exit points on a weekly chart. Once a signal has been detected on the weekly chart, the position trader will often use a daily or even an intraday chart to further refine his entries and exits. And then finally, there is the long-term trend. A new long-term trend, which identified on a chart set to a monthly time frame, are the most powerful trend signals of all. Long-term trend signals are much more rare than intermediate or short-term trend signals, and therefore are of benefit to all traders. Many short-term traders will wisely consult a stock's chart to determine its current long-term trend before they buy in. In fact, I teach my own students here at Follow the Money that it is best to avoid going long on a stock that is currently in a long-term downtrend, especially if they have a choice of another stock that is currently in a long-term uptrend. Long-term traders and long-term investors will often use the monthly time frame to identify their entry and exit signals, and then they can use shorter-term time frames like the weekly chart or the daily chart to identify a more precise and efficient entry price or exit price. So there you have a really simplistic but important overview of what trend trading is and how trend traders use the stock charts and price and volume data to actually make money regularly from the stock market. So many questions will arise at this point, specifically one I want to address on this podcast, and that is how much money can you make from trend trading? It's one of the most common questions I receive from new and aspiring traders. Really, how much money can they make as a trend trader? Now, this, of course, is an extremely difficult question to answer as it depends upon a wide-ranging number of variables, such as, number one, how much trading capital do you have, right? So if you don't have a whole lot of money, it's going to be difficult for you to start making a full-time living from trend trading. It's not that you can't. It's not that people don't make a full-time income from trend trading. It's just that it really depends. It's almost a function of how much money that you have. So you don't want to have unrealistic expectations. I always encourage people when they are coming into trend trading to have a really good plan, to understand, why they want to trade in the first place, but also to have a minimum of at least $2,500 in capital. I would even probably want you to have even more, but at the very least, especially as you're getting started, you want to have a small amount of money that you can put at risk and learn the ropes as you're getting started. Another factor that determines how much money you can make as a trend trader is your own personal level of risk tolerance. So if you are willing to take on excessive risks, then you can also reap pretty incredible rewards. But if you're very risk averse, well, then you may approach trading with a different strategy that may be much more consistent in your profits, but they may be lower profits. So again, it makes it difficult to say how much money you can make without knowing that variable. Another variable is simply your personal trading aims and goals. I've met and coached many different traders over the years, some who have said, I want to earn $30,000 a year, for example, from my trading. And you break that down and go backwards and you say, well, that means $2,500 per month, or however you want to break it down. And so it really depends upon your own situation. Suffice it to say that while an experienced trend trader can earn far in excess of the annual market average returns, new trend traders should focus less on trying to outperform the major stock indices, and they should focus more upon trying not to lose their trading capital. In fact, this is one of the most important rules for all traders, regardless of whether they are a trend trader or not, and namely, that is to seek to keep your losses to a minimum. Many new traders swing for the fences, and they fail to use stop losses, and then they act surprised when they lose half or more of their trading capital. Trust me, experienced trend traders can make excellent gains from the market, but trading success begins with solid rules. And if you're just getting started in trading, I want to encourage you to do a couple of things. Number one, here at followthemoney.com, we have created something known as the Trend Trading Bootcamp. If you are just getting started in trading, or you've been trading for some time, but you're not getting the kinds of results that you really wish you were, you want to become a person who goes through the Trend Trading Bootcamp here at Follow the Money. And you can get all the information about our bootcamp, our ongoing bootcamps, at followthemoney.com/bootcamp. Over the years, we've been working hard to put this together, and we released our very first bootcamp on June 1st, 2019. And we had many different attendees who were there. We had great testimonials from the people who attended. And we not only do these live in person, but we also do them online. So if you're listening to this podcast right now, our very next live bootcamp is going to be on August 24th, and it's going to be an online bootcamp. It's an all-day event where we cover 6 very, very in-depth modules that walk you step by step in how to make money as a trend trader, how to actually start your own trading business, if you will. So if you've been looking for a business that you can start, a new income stream that you could start this year, the Trend Trading Bootcamp could be a huge, huge answer to what you've been looking for. And again, you can find that information by going to followthemoney.com/bootcamp, and you can see what available times we have for the bootcamp. We may be coming to a city near you very soon. Secondly, when you are learning about trading, you really want to have rules set up. Remember, I talked about the rules-based approach when it comes to trading. And if you're new to Follow the Money, we have several different free gifts we'd like to give you as you're getting started as a trader. One of them is my top 10 trading rules that I've written, and many people have access to these trading rules, but you can access them for free. We also have a very powerful 1-hour video that we recorded at our 2018 Follow the Money Summit. And it was entitled 12 Lessons from the World's Greatest Stock Traders. You can receive both of those gifts simply by going to our website, followthemoney.com/email. Just type in your name and your email, and you will receive both of those gifts by email immediately. It really depends upon you to take action. And I cannot stress to you how incredible it can be to be able to trade as a form of income, because you can trade literally from anywhere in the world. You don't, as long as you have an internet connection, you don't have to stay in the United States. You don't have to be in the United States. You don't have to be in the city. You don't have to live close to Wall Street. You can literally trade from anywhere, even with your cell phone, right? It's literally very simple for you to have access to everything you need to be able to trade. Now, learning how to trade and learning how to do it consistently for profits is something that you have to learn. That's the skill, and that's the skill that we teach here at Follow the Money. So I want to strongly encourage you to invest in your education. If you desire to have a new income stream, and trading seems like it might be something that you might want to be involved in, I would encourage you to take action. Go to followthemoney.com/bootcamp. Find out when our next bootcamp is going to be in your neck of the woods and register for that. Be a part of it. Commit to your education. And my prayer for you is that you reach your financial goals in 2019 and beyond. Hey there, friends. Jerry Robinson here from Follow the Money Radio. Are you looking for a brand new income stream for 2019? Have you ever thought about trend trading, trading stocks, trading ETFs, trading currencies, trading commodities? Have you ever thought about it? I'm going to be teaching a very, very interesting all-day session. It's a boot camp called the Trend Trading Boot Camp coming up on August 24th. It's going to be an all-day event, and I'm going to be sharing what I've learned over the past 20, 25 years of trading with you. In fact, what it's going to be is a step-by-step process whereby you can begin to profit from moves in the stock market. Whether those moves are up or whether those moves are down, we simply follow the trend. This is something that I've helped many, many people over the years learn to do. It's a skill that you can adopt. It's a skill that you can learn. And you don't have to have a tremendous amount of money, but you do need to have a little bit of money, of course, to trade. But if you can learn the skill of how to trade, it's something that will stay with you all of your life, and you can apply it whenever you need it. It's a skill that is rarely taught, and we're going to be teaching it at this upcoming Trend Trading Boot Camp. It's an online event. You won't have to leave your home, and you'll be able to learn from the comfort of your own home. There's many different handouts you'll be receiving. You'll even receive a certificate of completion once you're all done. Lots of details you can find online. Simply go to followthemoney.com/bootcamp. Sign up, become one of the registrants for this upcoming boot camp, and you'll receive everything that you need ahead of time so that you'll be prepared for this incredible power-packed day of learning. August 24th, mark your calendars, and if you want to be a part of this upcoming boot camp, go to followthemoney.com/bootcamp and get more info there. We will see you there at our Trend Trading Boot Camp 2019. Welcome back to the program, friends. Great to have you along in our final moments here of Follow the Money Radio. We have talked today in this podcast about trend trading, a very powerful way that you can begin earning a side income, a part-time income, or even a full-time income from the stock market, the bond market, the commodities market, futures market, whether you want to get into Forex. There's so many different kinds of markets that you can take your hand to once you learn the skill. But there are so many things wrapped up in that skill that you need to learn to be successful. And I have taught many students over the years how to take the skill of trading, trend trading specifically, and actually turn it into a profitable part-time, full-time income. It's something that you can do. You can do this. It is something that's completely possible if you have the desire and if you have the ambition to do this. If you're looking for that part-time income, I cannot stress enough to you the power of trend trading. And so with all that said, I want to leave you with this final word, as we always do, this time by Victor Sperandio, also known as Trader Vic. He wrote a really great book back in the 1980s, and here's a quote. "The key to trading success is emotional discipline. If intelligence were the key, there would be a lot more people making money trading. I know this will sound like a cliche, but the single most important reason that people lose money in the financial markets is that they don't cut their losses short." End quote. Trader Vic made a lot of money back in the 1980s, reportedly making 300% on his money during the 1987 stock market crash. It is so true what he has said here is the fact that failing to recognize the importance of risk management, failing to cut your losses short. How many times have you been in a stock, for those of you who are traders, and it goes down and you say, well, it'll go up. And then it goes down some more and you say, well, just wait for it to go up. And then you get stuck with a stock that you really don't want to hold because you're waiting for it to go up. If you learn how to cut your losses short, you will be way ahead of the game when it comes to trading. And that's just something to think about. Remember, friends, when you want the truth about the global economy, just follow the money. Have a safe and prosperous week, and we'll see you right back here next time. Until then, God bless.
All of the information contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial decisions.